Are individual states within the USA the next huge buyers of Bitcoin? Welcome back to the Bitcoin Layer. I'm Nick Bhatia. Today, I want to go through the different bills and proposed legislative efforts going on at the state level and discuss just how large state buying of Bitcoin could become. We will be using a spreadsheet that was posted today by Matthew Siegel. He is the head of digital asset research at Van Eck. Now, we know Van Eck is one of the ETF providers now in Bitcoin. Van Eck also has a long history with precious metals and Bitcoin as well. So one of the original traditional finance proponents for Bitcoin. And Jan Van Eck is somebody that has contributed to a digital assets research initiative at my university, the University of Southern California. As Bitcoin's role in the global financial landscape evolves, understanding its potential impact on your wealth becomes increasingly crucial. Whether we see a measured adoption or accelerated hyper-Bitcoinization, being prepared for various scenarios can make the difference between merely participating and truly optimizing your position. This is why Unchained developed the Bitcoin Calculator, a sophisticated modeling tool that helps you visualize and prepare for multiple Bitcoin futures. Beyond traditional retirement planning, it offers deep insight into how different adoption scenarios could transform your wealth trajectory. What sets this tool apart is that it's integrated with Unchained IRA, the only solution that combines the tax advantages of a retirement account with self-custody of Bitcoin. In any future state, maintaining control of your Bitcoin keys remains fundamental to your Bitcoin strategy. Explore your potential futures at unchained.com/TBL. So let's hop into this post from Matthew Siegel. He says, "We analyzed 20 state-level Bitcoin reserve bills. If enacted, they could drive $23 billion in buying or 247,000 Bitcoin. This sum is independent of any pension fund allocations, likely to rise if legislators move forward." Let's go one step at a time. What are these bills? We have the idea of a strategic Bitcoin reserve now at the federal level. That is the concept of the United States government either transferring Bitcoin that it has seized from legal prosecutions, transferring that Bitcoin into custody of a reserve fund, either held at the Treasury level or the sovereign level. Importantly, not held at the Federal Reserve. Remember, the Federal Reserve banking system is a network of reserve banks to help individual banks within the United States and oftentimes banks overseas as well. It is not the holder of the United States gold. That gold that the United States owns is not held by the Fed. It's held by the US government, and that is an important distinction here before we even talk about where Bitcoin might end up from a balance sheet perspective. It is not going to end up at the Fed. So I find it hilarious when we have members of Congress or even the media ask Jerome Powell about a strategic Bitcoin reserve. The Fed has nothing to do with the strategic Bitcoin reserve, guys. The Fed is not going to be buying Bitcoin. We shouldn't expect the Fed to be buying Bitcoin. They have no business buying Bitcoin. So we have a strategic Bitcoin reserve potential at the federal level, but now we have this enormous wave of strategic Bitcoin reserve efforts going on at the individual state level. So now why would a state want a strategic Bitcoin reserve? Well, states have to pay for services for their citizens, right? Each state is a republic. Each state has their own laws. They have their own benefits that they have promised to their citizens. They have tax revenues. They have expenses. Now, in the balancing of each state's budget with revenues and expenses, they have to deal with how much money is coming in and how much money they're spending. Well, the part of money coming in can be driven in part by revenues generated from things like asset sales, right? So if a state decides to portion off part of its state-owned land and sell it to the public, those revenues come into the state. Those assets are held by the state, and then they turn it into income generated, right? That's how you go from the balance sheet to the income statement in accounting. Well, a strategic Bitcoin reserve at the state level could offer the same prospect. The state uses some revenues or sells off some land and instead tries to buy Bitcoin with it. The Bitcoin held at the asset side of the state might appreciate over the long term. Then let's say in 5 years' time, the state has a deficit or some crisis that they need to spend money beyond what their tax revenue is. Well, they can sell some of their strategically held Bitcoin for spot income on the current income statement. So we see a lot of reasons why a state might want an asset like Bitcoin. We even think about the prospect of a state not being part of the union over the long term. What if a state feels that the U.S. is going off of a dangerous fiscal cliff and one day will be in a large financial crisis because of the amount of debt? Well, that state might want a backup plan. And part of that backup plan is being able to issue its own currency. Part of being able to issue its own currency is having a hard money asset on its balance sheet. So there are a lot of reasons why a state might want a strategic Bitcoin reserve. That's not what I want to get into today. I want to go into this great spreadsheet that Matthew Siegel has provided us, breaking down the individual states, where these strategic Bitcoin bills are, and how much Bitcoin might be purchased, because when we actually get to the purchase amounts, it might bend your mind a little bit thinking about how little Bitcoin is available and how much demand there might be. Okay, let's go through these states. First, we have Oklahoma with the House Bill 1203, HB 1203 here. The type of legislative effort here, it applies to both a reserve and the state pension fund. So remember that a reserve is just the asset of the state, but the pension fund of each individual state, California has a few state pension funds. These pension funds have assets, and those assets are meant to generate income to pay out benefits over the long term for government employees at the state level. Now, these state pension funds, they own stocks and bonds, but they don't own Bitcoin. So the legislation needs to be passed within these states to allow the guidelines on the mandates for these pension funds to add Bitcoin to the portfolio. That's what you see here. Now, the HB 1203 in Oklahoma has passed Committee 1. The target is a 10% investment. That is a potential $1.5 billion investment, or 15,000 Bitcoin. In Massachusetts, we have Senate Docket 422. It has just been introduced. That is proposed to take down 10% of their funding size, which is their Commonwealth Stabilization Rainy Day Fund, which is currently about $9 billion. That would be 900 million in Bitcoin, or 9,000 Bitcoin. In Ohio, House Bill number 18 is in Committee 1. It is targeting 10% of their general revenue fund, or their budget stabilization fund, of about $5 billion. That would translate into about 5,000 Bitcoin. New Hampshire, Utah, and Texas are all in Committee 1 or 2 with their House or Senate bills. Iowa has introduced the Inflation Protection Act earlier this month in February, just introduced, targeting 5% of their general cash and emergency funds that are $5.5 billion. That would translate into about 2,500 Bitcoin at today's prices. Now, 4 very, very large states here in terms of the target allocation and the size of these funds are, a couple of them have just been introduced and a couple of them have already moved to Committee 1. These are Missouri, New Mexico, South Dakota, and North Carolina. Now, in New Mexico and South Dakota, South Dakota's both reserve and pension, these are both have moved to Committee 1, targeting 5 and 10% respectively of their large funds. In New Mexico, they have a land grant permanent fund, a tobacco settlement permanent fund, and other state funds. 5% of that would translate into 21,000 Bitcoin. In South Dakota, 17,000 Bitcoin is 10% of their state public funds. And then finally, North Carolina and Missouri, these have just been introduced. The North Carolina bill is HB 92, the North Carolina Digital Assets Investment Act. And in Missouri, in Missouri, SB 614, Treasurer Investment Provisions. These are targeting 10% of funds that are 17 and 27 billion for a total between these two states of 44,000 Bitcoin. So altogether, 242,000 Bitcoin potentially to be purchased if these state-level Bitcoin reserve funds are approved, and potentially pension allocations as well. This is an enormous amount of Bitcoin. We think about 450 Bitcoin mined every day. The amount of Bitcoin that's coming online, which is very minimal, versus the amount of Bitcoin demand that we have, is going to cause higher prices to bring out the supply. Remember, there is no market runs out of Bitcoin. The market never runs out of Bitcoin. It only can run out of Bitcoin at current prices. If prices all of a sudden tomorrow, we woke up and prices were at $300,000, you would have people that take Bitcoin off of cold storage, send them to the exchange, and hit the bid. So there's never a shortage. There's only a mismatch of price equilibrium. When we think about 250,000 Bitcoin being purchased by individual states, you think about the strategic Bitcoin reserve FOMO going on around the world. There are lots of positive signs that we're going to see strategic reserves on Bitcoin from Japan, from Russia, a lot of countries around the world. We will continue to watch and see how they get approved. When they get approved, how does it move the price? Where is the supply coming from? Is it coming from recent coins, old coins? We have the blockchain to tell us what is going on chain. So we'll continue to watch that. Make sure that you guys are subscribed at thebitcoinlayer.com/subscribe. You can become a TBL Pro and follow all of our quantitative reports every single week. We deliver those exclusively to TBL Pros. Thanks for sticking with us, and we'll catch you guys next time.